On today's Hashi, I'm discussing housing inventory, the Realtor.com investor report, and the producer price index, which came out on Friday. Little inflation update. Today is Monday, July 15th, 2024. I am Byron Lazine, and the hot sheet starts now. All right, welcome back into the hot sheet here as we kick off another week. This is the only show on the internet that goes live every single Monday through Thursday that the markets are open. 9:30 on the east, 6:30 on the west. Hit the thumbs up. If you're not yet subscribed to the YouTube channel and you're here live, go ahead and hit that subscribe button as we kick off this week. We'll kick off here in just a second, as we always do, with the inventory update and what's going on with the markets. Obviously, a horrific weekend in America. So thoughts go out to everybody impacted there, as well as the victim, true hero. I've got two girls, trying to protect his two girls and his wife. Totally insane situation there. As we get into this week, I think the first thing to look at as we kick off this week is, what is the market's reaction going on right now? And so saw a headline this morning, and before we get into the inventory update, here's some of the headlines that I'm seeing right now as it just relates to the market, right? Want to see, okay, what do investors think about what happened this weekend? How's this going to, impact, because this is a housing show. So how's this impact the markets, one, and then how does that maybe have a short-term impact on housing? So the markets, meaning the stock markets, expect a short-term boost after Trump survives the assassination attempt. And we're seeing here at the top, Dow rises 270 points, now hitting a record. So Dow up a record number after the miss here over the weekend. S&P's up, NASDAQ futures also now up. So stock market, that could have, 1 or 2 inches, another, to the right, you're talking about maybe stock markets that are, going the other direction and all of that. Obviously, that's the stock markets are not. I'm not trying to say the stock markets are all important. I'm just pointing out, hey, markets are up. So, markets and investors feeling good about kind of that scenario. Now, the interesting part here for us, obviously, the 10-year is up a little bit, right? Actually easier for the 10-year to go down. This is the 5-day look, so you do see it coming down from those last week. So it's before the weekend. Here's the 24-hour look. So when it opens this morning, went up a little bit. So 4.211, still, relatively lower than what we've seen in the last, month. The high peak there coming out of the end of June into early July. So that's the news there on the 10-year. Of course, last week we closed out on the 30-year fixed at 6.82, lowest number we've seen in a minute. So we're starting the week at 6.82. A little bit of pop on the 10-year could get us as high as 6.9 today if that's where it holds. But we're starting the week at 6.82. That's meaningful for any buyers who were maybe looking 30 days ago, 35 days ago, and had 7.35 as their quote. Okay. All right. Now, speaking of buyers, let's take a look at what's going on with their inventory. Actually, before I do that, I'll just take a look at the spread between the 30 and the 10-year. This is one of the reasons why, according to Housing Wire's data and Altos research data, this is one of the reasons why we're actually seeing the 30-year right now drop. That spread is getting better than what we've seen in last year's recent memory. The spread got really wide last year. Now we're getting closer to where the 2022 spread is. If we were at last year's spread right now, the 30-year fixed would be it would be much higher. Okay, so right now that's what the spread looks like, more of a 22 level, normalizing a little bit or more than last year on the spread between the 10-year and the 30-year. All right, now let's take a look at the weekly housing inventory. This is Altos research here that we go over. every single Monday. So inventory fell last week. It's 652,000 to 651,000. So fell about 1,000 units. Now we are over the 2020 levels. Obviously, 2020 was declining at this point of the year. We're 38% more inventory, active inventory than last year, but we saw a decline last week. But remember, last week was a 4th of July. This data here that we have was 4th of July week. The data was hit with the July 4th bug. Even so, July 4th was a Thursday, remember? And so meaning the bug went into last week, because really this is last week. This is July 5th through the 12th. So it's July 5th, that Friday, that whole weekend of July 4th weekend to last Friday. Okay. So with the holiday being a Thursday, a lot of people took Friday off. Haley, did you take Friday? Haley took Friday off. Could you believe that? Bam even let her take the Friday off. So a lot of people took that Friday off, extended the holiday spirits into the weekend, that Saturday and Sunday, the 6th and the 7th. Okay, so what could normally be an active weekend for, real estate listings to go live, a lot of them go live on a Thursday or on a Friday, didn't take place through that weekend, the July 4th weekend. So we would be more the expectation should be higher that when we come in here next Monday, we're looking at this past weekend, although maybe with this weekend's events, maybe Sunday was not very active, but you would expect Thursday and Friday was the more active day going into the weekend. Expect, certainly on new listings and potentially increasing the inventory. So inventory fell, and this is correlated directly to that new listing data on that 4th of July weekend plummeting. Okay, so new listings, 56,000. That was less than the same week last year at 57,000. And last year was the lowest level ever recorded. Look, this is the only time of the year we've actually gone less than 2023 levels for the year. If we go to 2022, we had 71,000 new listings. So new listings drove this nosedive on inactive inventory here for the week, meaning the July 4th weekend in particular. Okay, so July 4th having a huge impact, particularly being on a Thursday and impacting that whole weekend. Okay, right now the peak was last week for inventory at 652,000. We're coming into the week at 651,000. 2015, we were at 1.2 million at this time of year. If we look at 2019, I think is a better indication. 2019 levels, we were at 969,000, 960,000, somewhere in there for inventory. Sitting right now, again, at 650,000. If we look at what we did last year from this point, when we're 38% lower, 470,000, we just continued to go up from this point. Okay. So we went up all the way until November when we started that seasonal decline. Okay. Seasonal decline a little bit later than other years last year. But anyways, we went up that entire time. We went up from 470,000 to 570,000. So we gained another 100,000. If we were to gain another 100,000, maybe even 150,000, because we've been gaining at a faster rate this year, that would put us at 800,000, somewhere between 750 and 800,000 on active listings before we start the seasonal decline, which we undoubtedly will at the end of the year, like we do every year. Well, in 2020, when we started January, at 763,000. I mean, before we get back to the seasonal decline, which will obviously impact that number come January, before we start the seasonal decline, we could be back at 763,000 on active inventory. And that's a level that we were at pre-pandemic. So real interesting that we could get back there this year if we just see the same type of inventory growth from this point through November that we saw last year. We could be entering the year with, the same amount of inventory or close to it that we did in 2020 pre-pandemic. Now, I would expect, as I've seen in other election years, that come late October, November, you could see a real decline on new listings. If we just look at new listings last November, you were in line with 2022. I mean, we're sub 50,000 on any given week. And once you get into December, it really plummets here. Throughout November, you're right at about 50,000. October, you're at 56,000. By the way, that's the level we were at this week. Really low level for July, lower than even last week's level at last year's same week level. So we need to see a huge pop here on new listings. We need to see some sporadic little clusters here of a 2-3 week run that's healthy on new listings and inventory to get these numbers back up to where we were. But you could even expect that November, late October's numbers this year were going to be even a little bit less on new listings. I'm not hoping for that, but you could expect that as people want to wait and see, quote unquote, what's happened. That'll be an objection you hear in October. Maybe we wait and see what happens if they're not selling, obviously, on a timeline, and that might make sense for some. Price cut percentage, we're at 38% right now, 38.3. The last 2 years, we were at 33%. Okay. And that's what an average on a standard typical year, you would see 33%. That's what we saw last year. It's what we saw the year before. At this point, right now we've got 38%. And so we're above that number, even though we still have, significantly low inventory across the country when compared to a standard or a typical year. So more people cutting their homes before selling because more sellers are cautious and there are less sellers in the market. That's reflected in our pending sale data. We only have 381,000 homes in contract right now. Last year it was 377,600. 22 was 420,000 at this point. There's only 1% more single family homes in contract than last year. And last year was the lowest inventory levels, new listing data ever recorded. We have 200,000 more homes on the market, yet we only have 1% more on pending sales. It shows us how much hesitancy there is in the market and how much less demand. Here's your mortgage application index. Demand in 24 is lower than 23, and that's much lower than 22. So some of the lowest mortgage application for new purchases we've seen, lowest levels we've seen since 1995. Okay, so there's your update coming into this week on where we are on inventory. Of course, be sure to share the hot sheet with anyone who wants a 24-hour look back on housing. If you listen to the replays on Apple or Spotify, love for you to consider dropping us a review on there. Realtor.com just dropped their investor report. Investor share peaks as overall home sales hit decade-plus lows. So investor buyers accounted for 14.8% of home purchases in the first quarter of 2024, highest share in the data's history. Now, just because it says investor buyer doesn't mean Wall Street, okay? An investor could be you. I own a home and I want to buy a second home. Well, that's an investor home purchase. The number of investor purchases fell slightly annually, clocking at the lowest level since 2020, but still exceed pre-pandemic highs, topping 2019 quarter one by 10.6%. Though more non-investors are purchasing in all cash, investor cash purchase activity fell annually in the first quarter as all investors expanded their use of debt financing. And as the mix of investor buyers shifted to small and medium investors, that's what I'm talking about. Hey, I own a house. I want to buy a second one. Want to buy a rental. Okay. Medium investors could be somebody in your market right now that owns 10 doors or something like that, who are somewhat likely to use debt over cash. They find a good deal. They want to finance it. They want to keep kind of building that stockpile, that small inventory that they have. Small investors made up 62.2% of the investor purchases. That's small. Okay. We haven't got a medium. Small investors making up 62.6%. Okay. Of all these investor purchases. Okay. Here's the investor share peak as investor purchases hit lowest level since 2020. Investors purchases 14.8% of homes in quarter one. Okay. This is the numbers here, the share as investor purchases go, and we are right now 14.8% of the purchases. So they're making a lot of purchases, shares shrinking overall though. Okay. Total inventory is obviously down. So that is correlation there. Investor net contribution. Okay. Sellers versus buyers. Okay. Sellers versus buyers. You got minus 30,215 on that metric. Count investor buyers, count of investor sellers. You can see in the bottom here, there are more investor buyers of real estate than there are sellers. Okay, that's a great chart. By the way, all these are available for you. Download this, use this in some of your communications with folks. It's available for you inside of BAMX to easily download. If you're not in BAMX yet, use code HOT to get your discount into BAMX today, where we release our hot sheet show notes every single day after the show, as well as our daily downloads amongst our courses and everything else we have going on there. So the investor count of sellers is less than the investor count of buyers. That's during a high interest rate market. And it's also during record prices. So somebody said, I'm going to wait till prices come down. Why aren't the intelligent investors doing the same thing? There's more investor buyers than there are investor sellers. If there was data that supported a significant decline in price, I think prices are cooling as we see inventory and buyers pause. Prices are going to cool, stabilize, flatten, all of that. I do believe that to be true in some markets. Overall, on the average of what you see across the country, you might even see an uptick in prices, a small uptick. But if the investors are buying more than they're selling, they're very bullish about the future. Let me ask you, Mr. Buyer, how long are you going to be in the house? Oh, definitely over 5 years. Okay, so is waiting, if investors are more likely to buy today and continue to wait than sell today, does waiting have any data that supports that being a relevant plan in this market? 64% of investors purchased in cash in Q1 2024. Roughly 1 in 3 non-investors purchased in cash. So investors driving the cash market there considerably. This is again according to Realtor.com. Share of investors purchased by investor size. Okay, so this one is interesting here. You've got large investors making up that yellow orangey color. You have medium investors in the blue, and then small investors in the red. So right now, like if you look at this last quarter, you've got 35% of total investor count. Okay, so the small investors is up over 20%. Okay, share investor purchases by investor size. The medium investors gets you up to 30%. And then the large investors, it's only 5% of the purchases being made by the large investors. That scary Wall Street number. So you're starting to see they peaked there in 2021. You're starting to see that come back down to the levels you saw in 2013, 14, 15, 16, 17, 18, 19. We're back to a more normalized level of purchases by the large investors, what we're seeing right now. Okay. Here are the Q1 2024 metros with highest share of investors. You've got Springfield, Missouri. You got Kansas City, you got St. Louis, Birmingham, Alabama, and then Memphis, Tennessee have the highest share of investor buyers. 2,300 in Kansas City, 2,500 in St. Louis. Now those investor sales are all down year over year. Okay. Sales are down. What are purchases? 20% of investor buyer share in Springfield, 20% in Kansas City. So these are markets that are high. Year over year, Springfield's down on buyers, but Kansas City's up 15%. St. Louis is up 5.6%. Birmingham's up 28%. Memphis is down or up 2.5%. They're down on sellers across the board. Okay. Here are the metros with the most annual investor share growth: Montgomery, Alabama; Youngstown, Ohio; Peoria, Illinois, Albany, New York area, and Canton, Ohio, where you're seeing the most annual investor share growth. We're talking about 100% in Montgomery, 73% in Albany, 65% in Canton, Ohio. Here are the metro with the most growth investors, 2024 versus 2019. Savannah, Youngstown again, Peoria again, Springfield, Mass, and then Montgomery again on the list. More data there if you're interested in what investors are doing. And if you want to dispel any of those, investors own, 50%, they're buying 50%. Wall Street, that is buying 50% of the homes. Some really good charts in here to dispel those beliefs online. All right, on Friday, we had some more inflation data. Last week, of course, we had really good CPI data, and that was a trend here following the last couple months where we're getting, strong CPI data. Now we had the PPI come out. So the producer producer price index came out on Friday, and it came in a little bit hotter than expected. I think expectation was 0.1. It advanced 0.2% upwards in June. Okay, that's seasonally adjusted according to the Bureau of Labor of Statistics. So you can see here a little pop up on the PPI. Now the PPI and the CPI get combined and go into the PCE, which is the Fed's favorite tool, the PCE, not the CPI, even though the markets like the CPI. Okay, so this was one of the first in the last couple months, kind of hotter than expected inflation reports. Didn't impact the 10-year and the 30-year on Friday. In fact, it came down from 6.85 to 6.82 on Friday. So even though this came out Friday morning, really wasn't that big of an impact. It didn't really move markets all that much. And so that's a little bit hotter than expected, but not a huge deal there on the producer price index. I did think it was worth mentioning. Okay. As we again start this week, which will be kind of a huge news cycle week, obviously, with the weekend. How are the markets going to react? Well, the 10-year up a little bit this weekend, not much, and that remains true here through the live stream. 4.223 on the 10-year, so we could see a little bit of a pop on the 30-year starting the week here at 6.82. We'll see where that comes in later in the day. Freddie Mac 30-year fixed weekly ended the week at 6.89, so sub 7 numbers. Good. We'd love to see that continue to trend. We had some thoughts there that would continue to trend. Where you should be trending to on Wednesday is the BAM BBQ on this Wednesday. BAM BBQ is happening noon to 3 p.m. Eastern. If you haven't signed up yet, we'll put the free link down below so you can sign up to the BAM BBQ. Again, noon to 3 p.m. Eastern. If you've been to one of our live events or our virtual events, nobody does it like BAM does it. Okay, we've got a whole bunch of entertaining activity. We also have Sam DiBianchi talking about the state of the housing market. What's going on with this crazy DOJ? I saw a DOJ article this weekend, by the way. Let me see if I can pull it up. Probably not now. After actually, I did see it on Sunday, so it was after Saturday. Where is this Wall Street Journal article? I'll bring it up tomorrow. It really was like no new information. It was just basically like a headline. DOJ is still not in approval of this NAR settlement. The NAR settlement really takes effect a month from Wednesday, August 17th. So I'm going to be talking about that with Samantha DiBianchi, who's an independent broker. If you're not prepared for August 17th, that's going to be a great conversation for you. Okay. Luca Cree talking about Facebook advertising in 2024, what you need to know about running effective Facebook advertising campaigns. Chris Smith on exactly what to say, more important now than ever. We're going to give away some of his books, A Conversion Code. You got Tom Toole talking about time management and streamlining your workflows. Paige Steckling on listing videos. She's converting at a high level on her listing videos, and she's going to be with us. Myself, Eric, the broke agent, and Luca, actually agents, are going to be moderating the discussion. This is a free virtual event. Use the link below to sign up. That's Wednesday from 12 to 3. Be prepared for the moment as an agent of change. Thank you guys for kicking off this week with me. I hope that you have a great week this week. Work hard. We're now on the other side of July 4th. There's pockets of for those of us that have been in the business a long time, you know that these deals come in spurts, and I feel like the next couple of weeks could be a pocket of opportunity for agents with the right mindset. So take advantage of that. I'll see you Wednesday at the BAM BBQ. I'll see you tomorrow morning live, 9:30 on the East Coast, 6:30 on the West. Until then, toodaloo.